Morning traders, welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check? Thanks, Marty. And how are we doing in YouTube this morning? Welcome to Trader Lab. Thank you, Lee. Thanks, everybody. Welcome to the Trader Lab. I'm your host, Tom B. This stream's about integrating bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. The idea of this stream is to help traders understand the business of trading. What does it take? How do you do it? What are the typical obstacles and potentially solutions? The thing is, all of us go through the same learning curve. We all walk in the same shoes. We all have the same obstacles. Yet, in spite of it all, in spite of all the education, why do so many of us not succeed? There's many answers. And I would think if someone asked me, and they do all the time, really, what can they do? And I ask, do you have a vetted plan? Do you have trades that you've vetted that actually have a statistical edge? And often what I get is, well, I'm still working on that. And then my question always is, well, why are you putting risk on if you're gambling? This is not a business. It's not a video game. It's not gambling unless you choose to be a gambler. Now, I assume most of you don't want to gamble and you're looking for something more tangible, but that requires the work. And what you're going to find is we're in such a hurry to trade, to push the button. And what is that really? Let's just go a little further with this concept. Why don't developing traders do the work? They do some of it. They do some broad strokes so they can, but they're not doing what really has to happen to establish a business model that is based on gaming. That's a proven business process. Stops are overhead and cost of production. This is business. Yet most traders never go and do the work to actually develop proficiency and a statistical edge. If they don't do the work, and actually, and this is not, quote, the fun part of trading, it's the work part, then they can't expect an outcome of sustainability. They are then gambling. And what else are they doing? Responding to FOMO, because they can't wait to lay the foundation to actually build a business. And they're also seeking dopamine. And if you don't understand those concepts and what drives you to make choices, in spite of what you know is in your best interest, when you're overwhelmed, you need to understand why. And the solution to this being overwhelmed is to actually create metrics. So now you can create more calm because your emotional states are not what are driving your decision-making process. The decisions we make in trading have nothing to do with our emotions. The emotions are actually the obstacle to doing the work and doing what's in your best interest. I hope that makes some sense. I hope over the holidays and this coming weekend, you'll take the time to reflect. This is a good time. We're going into the holidays, not only now, but, New Year's and all that. It's a time to take a time out, reflect on what you're doing, and be honest with yourself. Are you really doing what needs to be done, or are you skirting it because you're driven by FOMO? You won't understand yourself until you go into this business, and most of us just keep doing what we're comfortable doing, which has nothing to do with the work you need to do to establish an edge. No edge, gambling, video game. It's fun, it's great, it's dopamine, but it's also a path out of the business. If you want to be in the business, just think if you wanted to be a surgeon. You want to be a high-level performer, you have to do the things that others aren't willing to do. Think of any high performer, whether it's in business, anything, sports, what do they do? Do they do what others do, or they separate themselves and they practice, watch films, get coached, improve, set goals? You see what I'm saying? Are you doing that? If you don't have that kind of desire and you're going to fight to overcome the things that take other traders out of the business, including yourself, then you're not committed. And then You have to be realistic about what your potential outcome is going to be. Hope it's not bad news, but you know what is just what it is. So make a decision. If you want to be in the business, you got to do something different than what you're doing if it's not working. That's all I can tell you. And even then, as you guys know, general disclosure, all Bookmap Ltd. Materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this isn't a trade calling room. If we get into anything, we'll talk about it, but everything must be vetted. Now, I have some announcements. First of all, in the U.S., there is a national holiday called Thanksgiving, and it happens tomorrow. There'll be no streams tomorrow, but Friday we'll be streaming as usual. Also, there's something else coming up here, which you certainly don't want to miss out on, right? Black Friday and Cyber Monday. Deals are coming. They still won't tell me what they are, but if it's anything like last year, you're going to want to, as they say, be here. Check it out. Have your credit card ready. If it's something that works for you, if you've been thinking about Bookmap, all I could say is, at least for me, Bookmap is a substantial part of my arsenal. I would not trade without it. But like everything, you're going to have to invest time to develop expertise in all the tools. So the education that Bookmap provides you at no cost is second to none. I've never seen a company provide education even outside of how to use their product because they're investing in you. So when you purchase a product like Bookmap, you're investing in yourself, but Bookmap is also investing in you. Something to think about. So check it out. See if it works for you. Now, we have another thing coming up here. You don't want to miss this one. A Pro Trader webinar. Now, these are the dates, and these dates are all Eastern Standard Time. If you're getting the newsletter from Bookmap, you received information on this. If not, mark these down. You're going to want to check these out. I can't say they'll be available on YouTube or when, but if you can attend, it would be a good thing. If not, they probably will be available at some point in the future, maybe not immediately. Again, they don't tell me these things. I don't ask. They don't tell. Isn't that interesting? Now, let's get into trading. This is the Trader Lab. This is about the business of trading, building trade plans. The business is not complicated. It's random. Take some notes, guys. We cannot fit this trading business into what we're comfortable with. In other words, certainty, predictability, and that's what we all go for. I want to be certain. I don't want to take a stop. I get it. Well, there isn't a business on the planet that doesn't have bills, overhead and cost of production. So we have to throw that idea out. The other thing is, how does the market work? How do we get in alignment with it? And are there tools available? But outside of Bookmap, which is really where the rubber meets the road, more of a microstructure, getting down, kind of into the nitty gritty of participant behavior, we have to have all the other pieces assembled so we know when to engage. This is the engagement tool. But everything else gets us set up for this. Now, auction market theory is how the market works. It's so simple. It's amazing to me how simple this is. Now, you have to differentiate between simple and random. Two different elements. What's simple about the market is it constantly rotates, and it's a price discovery mechanism. That's the only reason you got one of these markets. Well, the supermarket does the same thing. But most of the time, the prices don't change in the supermarket, so it's at a retail price. But if the price goes too high, you're not going to pay it, and you'll either not buy it or you'll find an alternative product better price. Okay, but let's just say it's only one product in the store, and it's an S&P, and if the price is too high, the volume dries up. That's the volume profile, and we see less buyers, and then the market's going to rotate. If the sellers want to find a buyer, they have to keep lowering the price to retail or some price that buyers and sellers agree on. But if the price gets too low, what's going to happen? The buyers are going to perceive it as a sale, same as you do in the store. You throw 3 in the cart, and then the sale's over, and it comes back to retail. So this kind of thing is going on. Well, in the supermarket, the time frame is long time frame, doesn't change much, right? Well, in our business, in our quote time frames, it's continually rotating, so it's changing all the time. But this process takes place in all of these rotations. Looks like we're going towards our 50 target up here. We'll have to get into that. Context is a condition of the market. Now, today, the context is up. And however, there's other possibilities too. So we have to be aware and try to align with the context. And this is very hard for traders because the context might be up in one time frame, down in another, and they're inside each other. Think of a vertical integration of time, like Matryoshka dolls. That's the way I've mentally put it together. Another way to put it together is like a multi-tiered vertical chess game. So you can be making a move in one direction in a higher time frame, but in a shorter time frame, you could be short. You know, it's like, well, how do you sort that out? Well, you have to sort it out, and you have to determine your time frame that you trade in your trades. This is kind of how this works. That's the work, and that's the part that really drives us crazy, because one trader's long is another trader's opportunity to get short. Which is the right answer? Well, that's what trade plan is about. Nobody can do that for you. Here's the higher time frame. Now, I'm going to explain this from the top down very quickly. This is the intermediate time frame, okay? This is the all-time high, and this is, you know, kind of what's happening. Now, I'm going to start at the top. This line is the highest volume from the all-time high down to, can't quite see the date, but I think it's August. This is like a big swing. Okay. Now, in this swing, when you see rotations like this up here, we are taking the volume in these at the moment. Now I'm in the high time frame, and I'm looking at the distribution of the volume here. Let's look at the language. Too high. I'm not paying that. Supermarket. And down here on sale. Too low. Throw 4 in the cart. Retail. Now, so it rotates on itself. But what happens if we find a price that's too high? We can leave it. All right, I'm not paying that. Supermarket. Now, we find, since we found a price that's too low, and then we leave it, now we have another price. Too high, too low, too high, too low. Retail. If it's too high, we leave it, and so forth. So this is the retail price in the higher time frame. As we go down to the next inside of itself, vertical integration, it's this. Then when we go to the individual days, this is the retail price. So I'm going down in, as you think of time frame, but this is not time regulated, it is volume regulated. That's the difference. Looks like our 50. That'd be nice to get that. Okay, so now let's come back to what's happened recently. We had the Acapulco cliff dive, right? Then we got our gap, not our gap, we got an open lower, continuation selling. This was our target on this day. Missed it by a little bit. There's no precision. The late sellers and the sellers in this leg became buyers. That's a squeeze. Then we opened, tested lower, squeezed some more. Then yesterday opened, tested down towards the 70, too low. This is the fair price in the higher time frame, north. Then we had day before yesterday's high and this high as our targets, which you guys were in the stream. Now today, anticipation is higher and then potentially profit taking ahead of the holiday, treating it like a Friday. So what do we know? 82 is the retail price from yesterday. And we have the potential for stops here. And then if we get up higher, so 68.11, 68.37, and then 50. So our target's 50, and it can go anywhere, do anything, you know, part of the thrill. Let's look at something else. This is 68.18 is a target. This was done early this morning. And these are areas of interest, the 81. And this was the target. This is yesterday. So this is the target for yesterday. Get into these stops. And then, where it goes, it goes. Nobody knows. But this is interesting also. I just want to point this out to you. These are those distributions. Now I'm going down in time frame. This is the retail price. I'm not paying that. Yeah, but it's on sale, retail. But what happens if this is too low? Oh, it's on sale. I'm not paying that. Retail. Too low? Leave it. Too high? Too low? Forget it. Too low? Too high? Too low? Too high? Retail. Too low? I'm out of here. Too high? Too low? Too high? Too low? Retail. Highest volume for the day. This is the fair price. This is your supermarket. Now what? Well, if we open higher, we can come back, check if we open in a gap, so that tells us something. Then we can fill the gap. We can come back here, or whatever. So that's the possibility starting out. And then we have targets going back to the higher time frame, targets here, here, and there, 50-ish, and even higher, but that's not our concern. Now, so this is our now, what do we have to do first? Context. What is the condition of the market? How do we know the condition of the market? Well, we take yesterday's condition, which is short squeeze, buyers, and the volume point of control is at the top, saying in the volume point of control is a retail price. Let's look. Now, let's get into Bookmap and let's look at how we put these pieces together. So, let's go a little further. Now we're going to go back. Yesterday's high, okay? The retail price that I just showed you is settlement also, so this is the retail price. This is where most of the volume took place yesterday. Yesterday's high, yesterday's value area high. Important. Watch. Now what? Next piece. That's yesterday's RTH. Now we move on to the most recent auction. The ETH, the overnight volume point of control, is the retail price from the last auction, which is the ETH. So yesterday's RTH, retail price is below us. Now we do our thing, and the last auction, which finishes at RTH open, is the high volume. New retail price. Looks like they're willing to pay more. Maybe. Okay. So this is important. I'm going to label it. It's a level that we don't want to forget. Now we're not done yet. This is still pre-market, pre-RTH open. So now the next thing is, where are we opening relative to levels? ETH high, ETH mid, yesterday's high, ETH low. Now, here's something for this astute group of traders. Listen carefully. If this is the retail price, the fair price in the trading supermarket, if you will, and the ETH low tests that price, and maybe it's too low, and now in the ETH, the retail price is here. Does that suggest to this astute group of traders, if we're thinking as shoppers, that maybe this is too low and this was the test? Is that possible? I'm asking you. I think it's possible. So now, here's my levels. Now let me give you the next piece. Grab your context sheet. This is methodical. The deals are posted on the Bookmap website. Look at that. Well, I guess we all better go after the stream, guys. Go to bookmap.com. Check it out. Okay, so we're opening in a gap. This is process, guys. Everything you see me do every day is how I trade. And I'm not saying you need to do this, but it's a process. It's the same. I don't know what the market will do, but I want edge. Edge comes from knowing how the market works and suspecting what it might do. The challenge for us is alignment and then structured trades that might show up in alignment with our perception of the current condition of the market. You need to understand you can't be right in this business. You can only be maybe I'll get scaled. Maybe I'll take a stop. Maybe it'll get to a target. Maybe none of the above. Write that down. That's the business. And if you can't handle maybe, then you've got to get something certain. And something certain doesn't exist in this business. I don't know any business that's certain. Do you? Everything is maybe. The thing about business cycles, if you will, or transactions, is they're all cyclical, and the curve or the rotation of your business is slow. This business, it's fast. So we have to adjust in real time here. So what's the context? We're opening out a range in a gap. There it is. There's the RTH open. We're opening above the fair price here, and the other fair price that was tested in the ETH is below us, and it was too low. That gives us a potential upward lean. Would you agree? So what does it mean? The gap, market's out of balance. What's balance mean? The thing we accepted yesterday, that value, that retail price is below us, and we're going too low right now. Is the market responsive? What does that mean? If we gap, do we get profit takers? This is a big question. So it's a holiday tomorrow, no stream. We gap higher. Does everybody punch the ticket and get out of Dodge and we get profit taking, or do we not? Great question. Don't know. So that's the first piece. Is the market responsive? If so, what do? Fade the gap back into yesterday's range. And then what happens at yesterday's range? Do we get in or not? That tells us what's happening. So two pieces, gap, and then we have to look at structured trades based on what we know, which is that what's below us is too low. And then the other part's going to be, what does the market do? You're going to ask me. The market goes up to go down. Write that down. This is rotational trading. Most of the time, it's not a bullet train. I mean, it can get directional, and then why does it rotate over itself? Because it's always going to rotate. Now, there's times it doesn't naturally when it gets one-sided and it's the express train and it's like somebody launched a rocket. But that's a smaller percentage of the time. Most of the time, the market's going to rotate. So if we want to get long initially, we also need to be aware, and you should be aware of this, write it down. The market goes up to go down, and the market goes down to go up. And why does it do this? Because there's always the opposite side on the rotation. So if we get an up rotation, there's sell stops. They are the sellers. Now, when will it rotate? I don't know. But if you run out of buyers, what's left? The longs. They become the sellers. And then you got to look at the logical locations where the market might retrace and take out the weak side. It's always going to take the weak side out at some point in all time frames. So we are trading multiple time frames here. We are trading the short time frame for initiation, getting risk neutral and the rest of it. And then we're also aligning with these higher time frames. It can be confusing, right? So you have to take it methodically, intentionally, and you have to go back, watch these streams, and see consistency. The market's random. Something's got to be anchored, right? So the only way you measure something is replicating it, not using variable inputs, because then you have randomness in a random environment. It doesn't work. You have to have anchors. So think about gaming. Casinos play games. They're exactly the same way. And the only way they extract their edge is anchored inputs, not random inputs. If you're using multiple inputs like random indicators and a little of this and that, and depending which way the moon is leaning, that's a problem because then you're just gambling. That's okay, but it's not sustainable. So you have to decide what are you going to do. Anyway, let's look. This is RTH open. You already know the lay of the land. Let's see if we see a trade. Now, I'm sharing structured trades with you. Some of them are going to be counter trend, which I don't recommend for anybody when you're developing. Counter trend should be trade management, not reversals, until you can vet it and have an edge. Under certain contexts, certain trades are not qualified. In other conditions, they are. That's why this is not mechanical. But if you have a process where you have actually vetted the conditions that trades are aligned with, that have edge, you will know when you can take the trade and when it doesn't even belong in consideration. And you're still going to take stops in spite of it. So we have to get over it. Overhead cost of production. Not a wound to your ego. I understand your self-worth, being right. We all get, don't you get it? What drives you and also what causes you to do things not in your best interest. This, statistically, opening higher outside of range, and I'm going to give you some statistics, has an 81%-ish probability. Why? That's the retail price. Taking out the first hour's higher low, called the IB, has 98% probability. Getting to the ETH high, which is up here someplace, has a 79% probability. Getting to the overnight mid, down below us, has a 68% probability. And filling the gap has about a 67% probability. So I'm aware of statistics to the upside, statistics to the downside, and I'm in a gap. I can fill the gap. It's basically a Friday, even though it's a Wednesday because of holiday. So I know these are possibilities, but I have to go with the condition of the market, which says up. So I'm looking for two possibilities. Responsive selling. In other words, oh, a gap, I'm out of here. I'm taking profits. Thanks for I'm on my way out of town. See you later. That's one possibility. The other possibility is we open and we get continuation buying because the condition of the market suggests maybe higher. So let's look at the first trade. So this is, now I'm going to do what I do every day here in the stream. I'm going to start labeling. Now, what am I doing? Great question. I'm tracking the behavior of the participants in the auction. Now, the auction works in all time frames. In other words, it's doing this thing like here. I open, I get sellers right here. There's some stops. There's a sell stop. Fine. So I get sellers, buyers. This volume here this starts at 0. This is called developing volume point of control. It's where the highest volume is. It's very sensitive because there's no volume. It comes down here. There's more volume here, as you can see it, than there is there. What do I know, though? What I know is I've got buyers here, sellers there. Why do I have a seller there? It's not going up. And I've got a seller here. So, but I break high. So if I break high and my buyers are here and my sellers were absorbed, then I know this might be support. So let's just start marking it up. And I'm going to do this to help you see structure. Now, at some point, you'll just look at this and you'll go, this is the new retail price. We're in a shopping. Remember, we're in the supermarket. Well, hold on. Gotta just do something here. A little. So this is the current retail price. Now, sellers are here, buyers are here, sellers are here. Right? This is resistance. There's my buyers. Why did the market move here? Because there's sellers here. You can see them passive. You don't see the passive side. You only see the aggressors. Who are the aggressors? Buyers, buy stops. I mean, a buy stops a market order. Never forget that. Because buy stops don't necessarily mean buyer. It means aggressor. But if it's a stop, it's an exit, right? Unless they're breakout traders or something. But most of these are traders getting taken out. Resistance, absorption, counter rotation, support. Let's just watch this. This is the open. We're in here, 10 seconds. Support is here. This sets up a long. Here's where this long is. Now, this is very aggressive. I'm not suggesting anything about it. This is a structured trade in the Trader Lab. Now, this is an advanced process, and most traders shouldn't trade this. What most traders should be doing is learning to read it, because this is language. So let's talk the language. I'm not paying that. Yeah, well, it's on sale. I don't know. I'm not paying that. Yeah, it's on sale. Break high. Break high. This is resistance becomes what? Support. Support. Now, I don't know when this happens. Don't forget, resistance coming down here. But I already know this level is here, don't I? If I know it's there, now I'm waiting for it. And I don't know if we go down here, I have to look lower. But what I know is that's too low. Look where it comes in. I'm going to throw a little line over here, just showing you structure. This is what I call structured trading. Now, again, I see the buyer, and there's the break high. Right here, I know I need to get long. Now, and my stop goes under here. I come back here. Where's my support now? It's there. Right there. So I need my stop under here. And now, where's my statistic? ETH high. You wrote it down. I know, 79% probability. This is going to be my scale. That's my first trade. VPOC migration. Let's watch. New retail price, right? So what I'm doing is I'm shopping. That's all I'm doing here. I'm shopping. Now, the problem with shopping is where's the price going to be too high, right? Too low. Now, it can change at any moment. This is a target. Let me bring you back somewhere. I think it was there. 60, wait, maybe not. 69.16 or so. Here, let's come back here. Whoop, not 69. 68.11 is a target. Then 37, and then 50. Okay? So that's, what do we have here? 11. 11-ish. See, this is the next target right here. And there's liquidity. This is VPOC migration. Let's see if there's any behavior at the location. This is resistance. Break high. Now what? Another single is sitting up here, I believe. Now, support here. Let me mark it again for you just so you can see it. Mid and VWAP. Now, we have a structured trade in the Trader Lab called VWAP to VPOC, and it could be the mid. But for me, this trade is okay. Let me tell you why. Because of this. And by the way, these sweeps suggest the counter rotation. I haven't mentioned those. So this right here is a potential long to there, and then looking to get this high. Okay, so to here, and then, wherever. Who knows? Now, this is part of the thrill, right? Now, when this happened, because now I'm over here and I have another target. I think I got to just go back and show you where this stuff comes from. So, 16 here. This is called a single. And what it is when we had the a down day here, we left this thin area. When you have a thin area, it's not auction. This is what an auction looks like. Too high, too low, But when you do rip, then it hasn't been checked. The market tends to come back to these areas. Also, a single, these are from market profile days, is basically a internal 30-minute, a gap on a 30-minute, let's call it a bar or bracket. We called them brackets, 30-minute brackets. We didn't have volume, So this left a little gap on a 30-minute, didn't come back and fill it. So that was the urgency. The market tends to come back to these levels. So anyway, it's around 17. All right. That's where it came from. That's where this thing is from. Okay. So right there. So that's resistance. See it? So I can do a couple things with this. I can ignore it. I don't, because I understand the possibilities, not what will happen. I'm above this. Okay. And this is my next target. Now, here's the problem. What's it going to do? I don't know. So I'm holding. Why? I got more targets up above. I got this. I got 30 and then I got 50. I got this. This is my next target right here. Who knew? And nobody does. So let's not worry about it. So I see the single. Now, what I'm doing also is now this is an ad or just an initial trade. I'm always trailing behind, but I give it a bit of room because I anticipate counter rotations. I don't know what's going to happen. But here, once we break, so this is a caution right here for me because I have the location and I have the auction. And I'm watching it always from both sides. Now, again, what I'm talking about is only specific to a way to read this. Your individual trade plan will select the time frame that you operate in. So let's look at this. Now, when this is happening, let's just go back. Any reason to think it's going down? Resistance, target, and then higher. Okay, watch. So we're going along, break high. This is support. This becomes notice what you got here. That's resistance, break high. This can be support. And it's not mechanical, but I'm looking at it. Now there's my high volume. And I break. Now this, if it tests and comes back, I'm okay. If it doesn't, there's trouble. Maybe. So there's my high volume. This is too high, too low, retail. Now we're in a mini mart. Same as your supermarket, right? Mini mart. Outside edge now. So we're below. This is resistance. This is resistance. This is resistance. Teeth chattering. Support is there. Okay? Resistance. Support. Right here. Support. So if it holds, here, let me show you the support. Here, I'll just show you so you kind of get a sense of what it looks like. Now, I have no clue, so let's get over this, all right? I'm just looking at structure. This is the mini mart. This is an auction. This is all we're doing here. Well, get over here. Is this. Sellers, Buyers, there's the absorption. Break high, this is the volume. It's right there. Too low. Break high, going to the moon. Buyers, why aren't we going up? They're being absorbed. Why did these sellers, why did we go up after this? They were absorbed. So what makes the market go down? The sellers absorb the buyers. There's that liquidity. But where's this support? It's here and here, the high volume. This is like your volume point of control, and it's the same as these. What I'm doing is going down in time frame as you think of it. So this is support, and this is resistance. So right here, the teeth chatter, my stop's under here. I stay a little bit behind, and it hits there, and hasta la vista, thanks for playing. You get a coupon to the buffet. Out. So then it's, grumble, this, that, and the other thing. But now I'm thinking, okay, I got my location. It's too high. I got to get short because now I'm looking for the statistics, which is come back and take the stops out of the longs. Remember, the market goes up. There's only been that counter rotation up to go down. Where's the stops? Under the opening swing low. And then what do I have from a probability point of view? I have yesterday's high to fill the gap. And what was it you're asking? This is kind of how the brain operates. Not saying it's good, but it is what it is. 67%. I'm sorry. Yeah, but to get to the previous high is about a 67% probability. I'm good with that. So, shorts. Let's look. So, break, pullback, sweeps. So, sets up shorts for me. Watch. We pull back. So this is setting up the shorts, okay? So I see the sweep. I breaks here, and now my resistance is here. Now this shifts up. When I get the sweep here, I'm going to tell you I'm very... Actually, let me remember what I did over here. Yeah, I took a short here, took a stop. Okay? And now I see this again. I'm at my location. It breaks down, and I'm taking a short, and my stop is above here. It's stopped out. Okay? So I got two stops, and I'm going, well, you're really not operating too smart here. So I faded it, and I took stops, just telling you. So now what I have to do is this becomes, and this was really, right, this thing. This was really a tip-off, and I just was asleep at the switch. I had this support, and I just did not trade it well. Traded it terribly. So took some stops. So now I'm going, all right, you're off sides. This now is too low, right there. And then it's pull back. And now I'm leaning on all of this, and this is too low. Variable high volume node. I got out of whack. So, turned around. And now this, which was resistance, becomes support. So I got long again. Got taken out. Got scaled, got taken out. So, turned around, got short, break under this, break, got short, going now to fill the gap, take the longs out. Okay, so that one gets scaled, and I'm looking for this. And I have the overnight mid, which was the next target for me. And the stats on that are 68%. Getting to close the cap, 67%, you see. So I was now going for this. So I got twisted around, but then, okay. So then I'm going for this. Now, let's take a look at our grid sheet again. Is the market responsive? Yes, this is responsive now. What else are we doing? All the longs that are in here are getting thrown under the bus, and buy stops are going to be following the shorts down, including moi. So is the market responsive? This is called responsive selling. Okay. Now, the important thing is, can we get into yesterday's range? That would change everything. Is the prior range holding? Yes, which we don't know until hindsight. So here I get the sweep. I'm still sitting short. Everything is wonderful until it's not. Here I come back to VPOC. Now, this is a bit of a surprise for me because I'm thinking we got stops, there'll be stops under here. So, and the fact that surprise doesn't mean anything. It's just we came back here. This is mean reversion. And the thing with reversion is if we can't do something, and you don't know until hindsight, then this location here, and I sit through rotations. It's just I trade a little higher time frame, so I'll sit through this stuff. Other traders in Trader Lab don't sit through it. They manage tighter. It's just an individual thing. Not a right or wrong thing. It's just what it is. Now let's look where the high volume is here. It's here. So sellers are here. Absorption is here. Break high. This is a change in behavior here. So this is a suggestion of be aware. Retail is here. You can see it there. Break high. So the buyer's right here. So then we pull back. Where's my support? It's there. So either this is too high, we're going to come down, or we're going to come back. Don't know. We come back. So right here, trouble. And if we're going to go down, it's got to, and we have a sweep. If it's going down, it's got to stay under here and bounce. Notice where we come. So I can do this if I understand what shopping is. If I understand what this says, this is a language. Now, I don't know what it'll do. When I see the change, I know now my buyers are here. Notice the down rotation. Well, where's the down rotation now? There's the buyers, and there's my pullback. So if this is the end and we got sellers at the mid, we're going to fall out. But what happens here? Here and here, support. If I get my buyers again, I know buyers, and this rotation, this one is larger than that one. So the buyers are taking control. So I have choices. If I sit through this, now my teeth are going to chatter because I know I got buyers and I know I have support there and there. See? So I know that now. So when I come down, I'm looking for it to, and if it doesn't, then I got to get out of the trade. Support. See? So that's as far as that one got. Now let's go back to our context sheet. Is the prior range holding? Yes. We didn't get in it, did we? What does it mean? The fade is no longer valid. Trade back in direction of the imbalance. Monitor for continuation. What does it mean? The market has accepted the imbalance. Why? The market broke out of the previous balance and subsequently rejected prior interpretation of value. In other words, it's going, I don't think so. So, north. So this sets up longs. Now, for me, working the shorts. So, out of alignment. All right. Now what, Tom? You shoulda, hindsight. You shoulda. Why didn't you? Why did you? Why? Because it seemed like the right thing at the time. Were you following your plan? Yes. Do you have confidence in your plan? Yes. Do you take stops? Yes. Do you get out of alignment? Yes. Do you make errors? occasionally. Watch. Resistance, right? See? So I'm looking at this and I'm going, two-sided trade. And I was posting this in Trader Lab. We're in a rotational environment here. I'm going, son of a gun. But it takes me off the shorts because now it doesn't mean that I won't be on shorts at a different time or from a different location. But what do I know? I had my shot. Didn't happen. I've got my buyers. What do I want to do? I only want to take longs. So now I'm sitting here, I don't have a trade, right? I pull back here. I know I've got support here. So I have a structured trade in the Trader Lab called the IB continuation trade, and it happens at 9:30 Central Time. I have a high probability of taking out either the first hour's high or low. And given the lay of the land, I'm going for this because we rejected what's below. Thanks, Tom. Thanks for playing. You get a coupon to the buffet. So now I'm waiting for longs. Here it is. So right here, watch. So my next structured trade, and in this, I did not get involved here because I could come under here or do anything. So I don't have location. I don't, in a two-sided rotational market, I only want to get long out here. And at the time I was on the shorts, I wasn't looking for the longs. I was working my targets. Okay. So this is resistance. So I'm not going to fade it. And this is the middle of nowhere. This is a fair price, retail. As an astute shopper, I like to buy on sale. I don't want to buy retail. I don't want to trade inside out. I want to trade outside in. However, I have a structured trade that if we found too low, and now I have stops above here and targets above here, and I'm above my single. Let's, look at some of this stuff. And I have stops, I think, unless this is misplaced. This is where I'm trying to go. Anyway. So this is called the IB continuation trade. It's a structured trade. Here's how this one works. And this you have to vet. Now, so I'm not fading because of the context. I have the IB here. I have liquidity, and this just comes in pulls. It's noise. But I have this. Let me put a little box around this thing. And didn't do that. And not this, the one underneath it. So this, ignore. It's this one and this behavior. So, and I'm going to look up at your questions in just a minute. Thanks for your patience. This sets up a long. Right here, this is the IB continuation trade. A couple ways you can do this. This is your support. This is your support. What is this? The mini mark. Too high, too low. Retail is there. If the sellers are there, the buyers are here, we're out of here. Too low. Let's look over here. Too high, break low. Too low. Not a location for me. Could be. Not. Here. Long. Now I got to get risk neutral. And this area is the next resistance. Watch. Maybe. Target for scale, resting liquidity, location. So it's long for the IB continuation. Took a scale here. Let's watch it. Come on. Current high a day, and I have a target sitting over here. And then after that, it could do whatever it wants to do. I mean, it can still do whatever it wants to do. So now I'm operating in a higher time frame, you might say. I'm operating in this because where's my next layer of stops? It's up right here. 37 and then 50. 50 is over this high right there. So this is the next layer. So it was 11, 37, and then 50. And then it could still go wherever it's going to go. Not my business because I have no idea. But that's how this all plays out. So this is the current trade, not a recommendation, trying to get over here. And then it's trade management, whatever. Okay, do you guys have questions? This is just Trader Lab, and this is just one way to slice it. Every trader figures out their psychological alignment. The thing about the business of trading is you got to do the work. And if you're in a hurry to trade, you're in trouble without doing the work. You're better off not taking any trades and then just watching streams, building a plan. There's a document section in the Trader Lab. There's a library of webinars on this process. Why can't we just all do the same thing? Because there is no plug and play, and it's a psychological alignment. You know, if I hold for this target, I may end up giving a ton of MFE back. If that happens emotionally, I can handle it, though I'm not going to be thrilled. Other traders are going to micromanage, and they're going to look at the structures, and they're going to try to manage the trades, and they're going to get taken out more. The answer lies in statistics and psychological alignment, not one trade. So it isn't the last trade. This is not about right or wrong. It's just about edge and anchored inputs. So the only way you can know whether or not you're gambling or you're actually sitting on the house side of the table is to do the work and know that when a condition shows up and a structure or a location, however you define it, and I've shared 60 PDFs of these structured trades examples, there is no plug and play. Then you would put your trade on, but you would have vetted it first. You'd know that when you put this specific trade on, that you have a positive expectancy of getting risk neutral before taking a stop. If it's not positive, why would you put the trade on? If you can get risk neutral, that's the first piece. Because now the worst that happens is you take a scratch. That's the first piece. Then it's targeting, targeting. Well, am I going to get there? No clue. Might we get there? I'm going to give it a probably, because there's buyers there. Who are the buyers? The buy stops over that swing. So I suspect, and that's all I got, that we'll get there. Now, what I don't know is, are we going to come down before we go up, or just reverse right here and drop out the bottom? I don't know the answer. You can't either. So you have to build a solution on you don't know, not on predicting and being right. Doesn't exist. So you cannot get it here. You have to change what you're trying to do. And what you're trying to do is gaming. If you don't understand gaming, then you need to understand casinos, because that is a successful business model. And they do the same thing with anchored inputs. In other words, they don't change the games. They don't have variables. They have anchored inputs. You can't measure variables. We're in an environment that's variable. You can't measure that environment because you can't predict it, but you can measure what you do. So if you have an anchored input, you would know where that trade would show up. You would know you have an edge that favors you versus the gamblers, and you're still going to pay the gamblers. If the casino pays a gambler $100,000, and then what do they do on the next hand? Do they skip it because they're emotionally attached to the last one? Do they revenge deal? Put, instead of 7 cards in blackjack, let's do 20. We'll show them. Do they do that? What do? They just do the same thing, because they only control how they play the game. That's our business. Now, when you do something other than what you have vetted Or if you haven't vetted, then you're just gambling. And it's emotions. Your emotions have swamped your consciousness. That's the key element and problem for us. So you have to do the work first to have a tangible metric. When you have a tangible metric, it gives you better opportunity to control the lunatic. I call that high, the chemicals released in your brain. If you don't have a tangible metric, all you have is emotions and chemicals. How's that a recipe for sustainability? It isn't, you see. So your decision is, what are you going to do? Are you going to keep doing what you do if it doesn't have an edge, but you still have random winners? Or are you going to step back from it? I encourage every trader who's not consistent and profitable, and we all have winning trades. That's not profitability. Okay. If you're not profitable and you've been doing this for a while, then you need to step back and evaluate what you are doing, and are you just making it up? Because I know for myself, I had tons of winning trades over the years doing certain things, but I didn't have anchored inputs. So in the end, once I anchored my inputs, I actually found that there were trades that looked great, that had winners that actually didn't have an edge. I determined, and I hope you would, not to do that anymore. Do you know which trades of yours actually have a positive expectancy? We are going to see patterns. We're going to have winners. Here's the answer for many of the questions you have. If you were to open your higher time frame software toolbox, you're going to see, 100, 200 indicators in there. Why are there 200 indicators? Here's why. They all have random winners. None of them create profitability. So and then we mix them, and we still have random winners, but they don't create profitability. Now, maybe you're the exception, and you will have winning trades, but do you have an edge that favors you versus the gambler? Well, which side of the table do you want to sit on? The reason I'm going over this, and I mention it most days, is if you're not profitable, it's really under your control. What most of us find is we don't understand FOMO. We don't understand why we skip the work, because we're seeking the dopamine and the thrill, the video game. And it's almost like, online gambling, right? Well, if you're going to bet on the game, it's a bet, and you're willing to lose. If you go to a casino, you throw a couple bucks down on the table with your buddies, you have the cocktails, and if you leave enough on the table for the house, they'll give you a coupon to the buffet. But in this, if you want to be in the business and make a career out of this, you do not want to sit on a gambler's side of the table, so you have to do something different. Your choice. But it's all under your control. But you have to take the control away from the lunatic. Does that make sense? Let's see. Well, Joe, I can't go over trade management. You have to determine that through testing. Okay. The mind hist. How important is the ETH context? It's very important because it's the last auction. So I use the RTH, what happened yesterday. Okay. Then the ETH is the last interaction, participant behavior, and it tells me valuation. It shows me, is there excess? What can it tell me based on the auction? Today's auction says go north, maybe. So that's how I use them. And then what was the ETH like? The ETH low from today tested the retail price, or the fair price from yesterday's RTH. We tested it and we were above it. That tells me longs. What it doesn't tell me is counter rotations, which are part of it. Yeah. So I can trade from either side, but it tells me the dominant side is the longs. Now, the shorts took a shot, as you guys know, and not so much. So then it's turn the barge around, get back long. This is where I'm trying to go. So That's what it tells me. But it doesn't tell me the individual rotations. It gives me kind of a higher level overview. But as a day trader, I can operate in this stuff if I have an edge. And once the market goes away, what if the market runs away from me? I'm on the wrong side. I take a step, whatever. It happens all the time. Not a big deal. Then I have to get realigned, which is what I did. So this is the last long. I'm okay with this. This will put a turkey on the table, in spite of everything else. Doesn't matter. And then, at the end of the day, it's like, what could I have done better? Am I all right with the shorts? I am. Did I know it was counter trend? Yes. Do I have a counter trend plan? Yes. Do I trade both sides? Yes. If you're in Trader Lab, subject to your plan, you would only be taking the longs. You wouldn't be taking the shorts. You'd be using the shorts for exits. Most traders, again, are going to be trying to trade both sides because of FOMO. They don't understand. They have to be able to identify a dominant side and extract metrics from the perceived dominant side. And if it changes, then they're using trade management, not reversals. So when it breaks down, it doesn't necessarily, and since we're out of range, they wouldn't necessarily be taking shorts. They'd just be out. And then if it breaks down, it wouldn't necessarily mean get short unless, now counter trend, you wouldn't do it. But if we got back inside yesterday's high, then we get in the range. Now the context has changed, and you might take shorts, you see? So it's really a function of the individual plan. I can't tell traders what to do. It's not my job. And besides, my plan and anybody else's not going to be the same. And my plan's a little different than I'm going to say than some other traders because I trade many different ways in many different time frames. But for developing traders, you don't need a lot. You just need a couple of trades. Anyway, going for this, not a recommendation. And it never has to get there. You could be done with the longs. It's all a function of trade management. Where does the trade fail? Well, I had buyers here, didn't I? There's my test. My sellers are right there. If I break high, isn't my support now here? You see? Too high over here, too high over here, too high over here, still too high up there. You see, I can look at these, but I have to know what I'll do, not go, what should I do? So subject to, and I see the liquidity here, so I have an order flow trigger, and I have my resistance. I can be out of this trade, right? Subject to my time frame, and just say that's fine, right? What's the right thing to do? I have to say, I can't answer for you. I can answer only for me. And let's say I get out of this and it just pulls back here and then goes and makes a new high and keeps going and I'm not in it. I got to be okay with that. And the reason is because I already know what I'm going to do, not what the market will do. I always suggest to traders, your plan, when you come to market, it's no longer what should I do? It's here's what I will do based on X. That could be an exit or nothing. You see what I'm saying? This might only come out here. Take stops and then come right back again. It's called mean reversion, multiple time frames. This is why you got to know what you're going to do. What do we know here? This was support, broke below it. This now becomes resistance. Break high, resistance. From there, where's support? Here, here, right there. So I take these high volume nodes and I look at them as stores, shopping. And when I get high volume, what it is retail, remember? So if I get too low and I see absorption, outside edge, it is on sale. Now, what I don't know is it's going to keep going. When it breaks high now, and I see the icebergs, and I see stop divergence, here's a little something for you, for those indicator lovers, 66 sell stops, 80 sell stops, 10 lower price, less sellers. So who's selling? The stops. Inventory is being absorbed. Don't know until here. Now my volume is sitting there. Don't know. Break high. Now, where was my sellers? Here. Buyers are here. Sellers are here. High volume is going to be here. There. That's support. That's resistance. You can see the structure. Now, should you trade this? That's up to you. No comment from me, except what do I know? I know if I get long, I got a scale ahead of this, right? And if I can clear this and hold it, I got that. If I can't get above here, then hasta la vista. So if I get long, as an example, where's my sellers? You see where they took control? Sellers are here. Sellers are here. There's the icebergs. This is my liquidity. Those are my sellers. Where did they drop it? Sellers are here. They dropped it. Sellers are here. Resistance. They dropped it. Where is resistance? It's right there. So if I get long, I got to scale before this, because this is where my sellers are. You see where we went? So I can use the auction, not to predict anything, but to look at where the behavior is taking place. So I have support there. I got resistance there. I have stops or fuel here. If I get through here, I got that. If I don't get through here, these longs become sellers because of sell stops. If I get under here, the longs in here become sellers because of sell stops. Does that make sense? So it's only longs or long continuation trades, not recommendations, of course. Here, scale. And then, not a recommendation, stop under here or under here. And then you're in your Barca lounger and whatever. Risk neutral. This is what risk neutral is about. Questions, guys? You're asking me about icebergs and stops subchart. I don't use it. This is CVD, which I don't use either. It's there. Couldn't tell you why anymore. Old habit. I look at it here because it's reflecting what's happening right here. I need to know what's happening here, not a cumulative or something with the look back period. It's just the way how I use it, So I'm only looking on chart and at the liquidity, the heat map. So this is really where, order flow is really important because I can see it. You can see this is pretty heavy. And if you look at the limit order book here, you can see the liquidity is sitting right where it's darkest. That's what this does. So we don't have to look over here at this thing, the dome. We can just look, at the limit order book. We can just look right here and see it. This is real time algos here, and this is historical. So anything to the left of the line is what was here. So if it pulls, I'll see that. But they're adding right here 151. This is showing me that there's more coming in over here. So why is there more? There's sellers. Now, the thing is, this is like Pac-Man. Do the buyers consume the sellers, or do the sellers overwhelm the buyers? Pac-Man. So if I get through this, then, and where's my buyers? Buyers are sitting here, buy stops. So if I got buyers up here, where do you think the market's going to go? That's why this is a target. And when I say it's going to, I'm always going to say, where might it go? But why wouldn't it take out the shorts? It's a question. It's the same reason that these longs can get taken out. But where's most of the liquidity? It's not sitting here. It's sitting there. And where is it? Here. There's a little gap in there. This started this whole down leg. It's right there. So let me ask you, do you want to fade this, or do you think that the shorts that are sitting in all of this are now getting squeezed out, and that this would be a probable location? What do you think? Is that logical? The IBC trade, go over a trade management before target. Well, Joe Mack, trade management's an individual thing subject to time frame. I trade to this, and I sit through this stuff, and I'll tell you, I go from euphoria to depression, but we all do. It's emotions. But I also know that, at least from an experience of doing this for a while, that the market goes up to go down and goes down to go up. And that when one side is caught, the chances are pretty good that where the stops are piled by different time frames are going to get taken out. And again, it never has to do it. This is a sweep. This is very important what happens here, right here. Let's watch. Because a sweep suggests, well, possibility of a counter rotation. Now, this is resistance, and if we can get above it, it can become support. If I rotate off of here, then I have choices. But my choice is determined by my plan, not by what happens here. In other words, my plan says if I'm trailing and this is too high and I counter rotate, I can just be taken out of the thing and forget it. My plan determines where is too low. Where's my volume? Well, here. Now, there. Let's look at the high volume. Let's just start breaking this down by multiple time frames as you think about it. So, retail price, microstructure. I'm not paying that. Too low. Leave it. Start this thing again. Too high, too low, retail. Break high. Resistance. Too low. High volume. Next one. This one. Too high, too low, too high, too low. Retail. It's in here. Should be there, but it's actually there. Support. And it can take this out and still come. So we're talking about trade management. Where were the buyers? They were here. Where's the stops? There, 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 and of course under here and wherever. So where might this come? Here and out here. Where might this trade fail? And this is not a recommendation. And it's only failing based on the time frame under here. What was this? This was resistance. There's your sweep, suggests the counter rotation. Get under here, subject to the way you manage your trade. There's your micro high volume. It's too high. You could be out of this, or higher time frame. You're going to sit through the counter rotation and risk giving back this open trade equity. It's almost 10 points. Some of us will run behind the garage and step on a rake. Others are a little more trading a higher time frame, you see. So what's the right answer? I don't have a right one. I have a way to read the market behavior and anticipate what might happen, but I don't know what will happen. So let's watch. I do know sweep in this was if we broke above it, it would be support. If we break below it, then it's resistance. I do know that my buyers were here and it was too low. If I come outside and this is an outside edge, I can do this or I can just keep going, right? Why am I saying it can do this, it can do that? Because that's the truth. Because I don't know what it'll do. So we can't predict what it'll do. We can, I don't want to say the word guess, but I'm going to say is we can look at it and try to make some sense out of it and understand that this thing rotates. It's just the way the market operates. It goes up, it goes down. Notice what do we know so far, though? The up rotation is bigger than the down rotation. The up rotation is bigger than the down rotation so far. So if I'm holding and I can clear this, then I can go on to target. If this rotation becomes larger, then I'm going to be taking the stops out. It's one or the other. So from a trade management point of view, I don't know what will happen. I know where it might happen, and I have to know what I'll do as soon as I recognize it. If my trade management plan is when I see this, I get out, I'm out. If it's counter rotation and my stop stays under here because this is too low and I'm testing it, then I stay long. If I know this is resistance, which it is, then I got to clear this. If I don't get over this, again, I have choices. Is it only going to test where the sellers took control and then fail? So now, and not a recommendation, I monitored this. Why? Too high. It's resistance. Right there, the sellers took control. So this volume in the mini mart is too high. Sellers took over here. So this right there is my resistance. There, basically here. So subject to, your thing, this is a key level. See the behavior. If I can understand the language of the market, I can then be prepared on the retracement if it's in my plan to exit. Or I'm out here and I'm just going to, live with it. Does that make sense? So what do we know? Retail price, too high. Where did sellers take control? Here. What happened over here? Sweep. All these pieces suggest the counter rotation. What it doesn't tell us is depth. Might only come here, come up here, take it out, or too high, and then we're going to work these stops out of the longs. Don't know. So the plan is what tells you what to do, not this. Because the plan would say, if I get my sellers, I have my sweep, in spite of this, and I don't get back here after the test, I'm out. That's one way to do it. The other way to do it is you're way out here someplace, and the market has to completely crater, but you're going to give all this back, or something in between. So I'm just saying these are options. Does that make some sense? Pablo, you're asking me when would shorts not be counter trend? Well, we'd have to really get down into yesterday's range and value area. So the shorts are counter trend. Doesn't bother me. I trade either side, but and I will discuss counter trend trades, but because in Trader Lab we have, our senior trader has over 50 years. I've got 47, right? So we have all different traders in there. But depending where you are in your development, you should trade with the dominant side so you have less things to concentrate on until you develop competence. And competence, because mechanical. So I know this, right? So if I know this, my plan, I can right here, I can be out of this thing. See what I'm saying? How can I know this? The answer is I can't. But I know the behavior, so I can anticipate it. I have a little saying. I have all these little things. One is you got to anticipate to participate. So what do? I anticipate. And then I get the selling, change, the test. This right here. Again, I'm not saying it's not a trade recommendation. You could be out in spite of this and not even think about it. Because where was this long from? Wasn't it from down here? I mean, I'm okay with that. You? And not even think about it. Now, our nature, FOMO, is to be flip-flopping and indecisive right here. Oh, I want to get this. What happens if it goes there? What happens if it goes higher? I'm not going to be in it. Now we're thrashing. Do you thrash? That's because you don't have a plan or you're ignoring it and the juices and the chemicals, fight and flight, are circulating in your brain and you no longer are aware of your plan because it no longer is important. The chemicals have swamped your intentionality. This is what we work on in Trader Lab. I'm not saying it's for you. I'm not saying Trader Lab's the right place for you. There's no holy grail. No matter what you do, there is no secret. The only one thing you need, and just do this, do what I do or do what somebody else does. You've already tried it. It doesn't work. So you can't just take the same flawed approach and move it from educator to educator and expect a different outcome. You can take any approach, but you have to vet it and you have to know it has an edge. It's not your P&L. The P&L is the outcome of a plan with an edge. It doesn't go the other way around with random winners and you think now you're in business. You're not. You're going out of business. It just hasn't happened yet. So you have to sit down and ask yourself, are you going to keep doing something that you've proven to yourself doesn't work, which is random inputs, or are you going to take a page from a proven business model, which is gaming, and say, okay, well, I know what works. Can I overlay this business on a proven business model and not reinvent the wheel, run in the track that others have already created, and that's gaming. You can learn that in Trader Lab, but again, you have to do the work. It's going to take you time. You're going to have to change your beliefs about what the business is. You have to also determine, have you been playing a video game and just gambling, and are you responding to dopamine, and FOMO and all the rest of it? Is there a way to get a handle on those things? Well, without metrics, you don't have a path to self-control. That's why no metrics, all you have is chemicals in the brain. Which one do you want running your business? Your emotions, your fear, your FOMO, or do you want to approach it like a business, understanding there is cost of production and overhead, and understanding that if you play the game, same as the casinos, you don't change it, you have the discipline, you will over time extract the edge that you've vetted. Hope that makes sense. Please give a like, and please remember there'll be no stream tomorrow, but there will be one on Friday. And don't forget the Black Friday, Cyber Monday sales. I understand they're already live at bookmap.com, so go check them out. If you've been thinking about subscribing to Bookmap, I would say this is probably the best opportunity of the year. Also, please give a like on the way out. Support the stream. Remember, there's a link in the bottom of YouTube. If you want to visit Trader Lab, there's no cost for it. It's a community of like-minded traders who've come together to leverage their collective experience. It's about the business of trading, creating sustainability, and you need a plan and understanding of market mechanics in order to have that opportunity. Don't forget to like. Have a great Thanksgiving if you're celebrating that, and I'll see you on Friday. Have a great holiday.